Hello, folks, and welcome back to another episode of the Daily Crypto Byte. Today is Tuesday, March 29th, and we've got Bitcoin grinding higher, but the alts really stealing the show today. Lots of movement in terms of price action. We've got assets like Rune up 25%, but all across the board, some really steady, significant price action. So we'll break that all down for you and a lot more. Before we get started, CJ, how are you doing today, my friend?
Doing well, Monty. That's right. The alts are moving. And don't discount the meme coins. Doge Elon up another 15% today after being up 40% yesterday. Whatever moves or has volatility is pretty interesting. So, really, really cool to see that one pop off, but also a lot of really other good assets starting to find their way. Like Solana, back above 110 for the first time in quite a while. So exciting to see that type of price action as well with the NASDAQ and stock market. I mean, another very significant gap up today. So we have a couple charts to check out regarding that. But how are you doing, Monty?
Yeah, doing well, CJ, doing well. Very encouraging, like you said, to see the equity markets opening up like they are today. But even more so in my mind, seeing this risk tolerance, this risk appetite come back to the crypto markets. I mean, it's very evident from those meme coin moves, like you mentioned, that people are willing to take on some risk here. And I think a lot of that has to do with Bitcoin, grinding higher. So we'll talk about that. But yeah, I'm ready to dive into today's episode. You want to start us off with some charts?
I will. But before
Oh,
we get into the charts, I just want to make one point about the meme coins now that we're on the subject, is just that like a lot of times people will say meme coins pumping is like a red flag. It means we're near a local top. And I do agree with that premise. However, it has to be in the right context of the trend. Like, for instance, if Bitcoin's been trending for a long time and is almost like creating new highs or new all-time highs potentially, and you have Doge Elon and Doge and GM and all of these meme coins, once you have that towards the end of the trend, it becomes a red flag. But at the start of the trend, it actually could be a very significant ignition point for risk on behavior. Because what we saw in early 2020 was Dogecoin was one of the first altcoins to pump like 50 to 100%. And everybody, there was like this common consensus, in the pre-2018, pre-2019 era where it's like Dogecoin, just get it while it's cheap, because the trade is like from 10 sats to 100 sats, and just get it while it's cheap. And it pumped 50%, and I was like, oh, I missed it, right? And it wasn't even at a cent yet. So that type of price action within the meme coins can actually sometimes be like a catalyst for people to come back into the market who want to take more risk. So we'll see, but I think it definitely deserves some context and some nuance when just looking at the meme coin price action. But yeah.
yeah, absolutely, CJ. I mean, if you think about back to like October of, 2020, that was one of the first things we saw pumping was Dogecoin. And that really brought back a lot of the investors that had been, away from the crypto market for a while. That brought back in a lot of those Reddit traders, those GameStop traders. And it seems like we're having, similar price action now and perhaps the same retail participation. So encouraging stuff. Ready to dive in some charts?
Yes.
Let's do it.
So yeah, first one I have to start off with today is not from TradingView. It is from Macro Charts on Twitter. It has to do with the NDX 10-day breadth thrust. And this has been the sixth strongest of all time. So this is pretty interesting just to see how strong this rally has actually been. Does it mean it's sustainable? We shall see. Nevertheless, I think that this thrust is really, it was very powerful, and a lot of assets were really getting bought at levels in which we were very fearful. And obviously we just have you zoom out, you have a 10-year bull market, but even in the little dips of these periods of time, when you get these up thrusts, typically, we've continued to rally. So we'll see what happens. Still may need to close the gap that we formed earlier today on the S&P, but still up over 0.5% today on that one. ARC up over 2%, oil back down to 100. I think the one thing that is kind of interesting is just sequential. When we have, we have gotten above the midpoint of the range, which is really good. Like if we consolidate above this level and say we just do something like this, where perhaps we consolidate a little bit on that level, maybe create some type of widening pattern or something. If we remain in a boring range where, nobody's really making money, but no one's losing money either, I think that would be really ideal for Bitcoin and risk on assets like crypto, because people are going to say, all right, well, if I don't have opportunities or volatility in the S&P, why don't I just go trade Bitcoin? It's a 70 vol, 80 vol asset, and maybe there's some more opportunity as equities remained a little bit more range bound. So that's something definitely to consider. However, I would be cognizant that we are on that TD sequential 9. You can see how the buy 9 really reacted and took us back to the moving average. Perhaps this TD sell 9 does something different. Takes us back to that moving average, form support, potentially get another up thrust or something of that sort. We'd have to reevaluate at that point. But if you look at this common theme, you'll see it in a lot of the indices where NASDAQ, you gap up above resistance, but you still have that TD sequential sell 9 from DeMark, just kind of warning you that we might get a couple down candles here. Regardless, the trend is still pretty strong, and Bitcoin is still doing all right despite running into some resistance. Now, the thing that I said about the S&P, where if it kind of just remains in a range, Bitcoin will probably do well, that same concept applies to Bitcoin as well, and like flowing down capital into the altcoins. Because if you have a situation where maybe you don't go straight up, but as long as we don't go like straight down or like retest that level and break or do something like that, as long as we remain in a range, the alts will likely continue to do really well. And the thing about Bitcoin is that there's still just so much sidelined capital. There's a ton of realized gains that have been had over the course of 20 and 21 due to the phenomenal performance by the crypto market and stock markets during those years. And there's a lot of stablecoin liquidity still waiting for a pullback here. And a lot of times in Bitcoin, after a prolonged downtrend, you just don't get a pullback and we go really high, like really quickly. And I'll show you one of the examples that is really clear in my memory, which was the low in the bear market of roughly 2019, 2018. But basically, if you look at our chart formation and just kind of the context of where we're at, and you add sequential, this looked, in the context of technical analysis, pretty similar to what we're seeing now. You had the breakout of the ascending triangle, you had the up thrust, you had the wide divergence from the moving average, and even so, you had a TD sequential sell 9 following that shooting star candle. So everything, in technical analysis would tell you, all right, well, logically, we're probably going to retest this level, consolidate a little bit before, finding another up thrust in the trend. But the way that Bitcoin was behaving was that there was just so much supply absorbed from the capitulation down here that when the time came with the breakout, like it literally just left everybody else in the dust. And you never had a chance to buy back in at those prices. We went straight to 14K. Not saying we have to go straight to 60K, but it's definitely a situation that I would not rule out by any means. So just some Bitcoin history there. But I'll let you take over for a little bit, Monty, before we potentially dive into some of the alts or other news.
Thank you, CJ. Never hurts to dust off the pages of the old history book there and take a look at some old chart data.
The old Bitstamp chart.
The old Bitstamp historical data, always coming in handy. Yeah, thank you for that. Really useful stuff. And I just want to quickly kind of dive back into the Bitcoin chart and just take a look at what to me was kind of the turning point here in the last couple of days that allowed the conviction to come back into this market, that risk appetite that's so important to altcoin price action. And, if we just look at what we've been seeing over the last couple of weeks here, basically since the start of 2022, we put in this low here at, 34,000. And from there, we started to come up and we made our first retest of the 45K level. In this instance here, we were rejected, came back, found some support at the 20-period smoothing average, another retest of 45K, and were promptly rejected all the way back down to 36K. That's a strong move, and it doesn't exactly provide a lot of conviction that we are out of this prevailing downtrend. There is still the possibility with a retest of these lows that we break down and go lower. That's evident from these wicks here. There were some scary moments. Luckily, we saw supply absorption, higher lows were made, but ultimately there was still fear that we could head to, 32K or below when we were kind of retesting these lows and getting rejected at 45K. Again, at the start of March, we got rejected for the final time at this 45K level. And as you can see, that was another sharp sell off from 45K all the way down to 37K in a matter of 5 days. That is a sharp correction and keeps speculative investors out of this market. They do not want to invest in something that is making these sort of moves to the downside, retesting lows, and ultimately still has the possibility of going lower. But as you can see here, in the last 72 hours, we've finally broken above that level. We reclaimed that level and climbed higher. And this really marked the turning point in my mind for a lot of these alts to really start running. And one thing that I like to look to kind of gauge, risk appetite and speculative investor behavior is the ETH BTC chart. And what's pretty evident is the fact that while we were kind of putting in those higher lows here, like during this period of time that I was just mentioning here, people were not willing to take risk. ETH was still underperforming relative to Bitcoin. And you can see that with this prevailing downward sloping trend. It wasn't until just in the last week where we started to see some signs of, positive price action in the ETH BTC pair. Even still had some indecision while we kind of, consolidated below that 45K level for a couple of days. But now we are climbing higher in terms of ETH price action, in terms of ETH BTC price action, moving after consolidating above this 20-period smooth moving average. And to me, that's a great indication that people are starting to deploy capital into more higher beta assets, more downstream assets, as we often say, and, less about Bitcoin. Obviously, it was incredibly important that Bitcoin established these lows, continue to put in higher lows and ultimately breaks that 45K level, because that is the key that, we aren't going lower here, that we aren't possibly going to retest 32K. That's what a lot of that sideline capital was waiting for. Not just, your everyday retail trader, but hedge funds and institutions as well. They were waiting for this sort of move. And I think we're seeing that reflected today, because even the assets that, were very close to the bottom are starting to pick up in terms of speculative price action. So, I think risk appetite is back. I think speculative investors are looking to altcoins now that Bitcoin has reclaimed that critical 45K level. And, ultimately, I think we're going to continue to see a lot of strong altcoin moves as long as Bitcoin can kind of continue to grind higher, or even like CJ said, just consolidate in a sideways range. I think that gives these alts a lot of room to run here in the near future. So exciting to see that, this fun price action's back. People are really deploying their capital into these alts. And I think there's just a ton of opportunity here as we kind of kick off this this part of the market. So exciting stuff, but I'll pass it back to you, CJ.
Yeah, Dogelon, Waves, Rune. It's the bulls are back. There's some crazy price action going on. I like this question, and I will address it, even though we don't normally take questions. But I should provide a little bit of context in this Mazzari chart that I did share. So I will go ahead and do that very briefly. So the question was, does funds holding these assets make them quote unquote, safer? And what is your what's your opinion of things like DYDX, 0x, and some of the others that are on here? So I think the important thing is that you should understand the institutional narrative of each one of these assets, because if there wasn't one, they wouldn't be held by institutions to begin with. Now, does it make them safer assets to hold? Not always. DYDX obviously is a really interesting project in terms of layer 2 trading and having like platforms to be able to trade on chain. However, its airdrop token is performed, very poorly. However, you have to think about, all right, what's the context of what these funds are thinking? Maybe they're thinking more long term as opposed to just, the short term momentum that, Rose and then Near and Terra have really experienced. I think those are good projects. I'm just not kind of saying potentially that's their mindset behind them. So I don't know if it makes them necessarily safer, but I think if you watch the price action for long enough and for close enough, you can see when there are certain assets that are getting bid by institutions. And typically they are the ones that don't pull back as hard when we have bearish price action following a pump. AVAX is one of the textbook examples of having Jump and Three Arrows Capital bid it when it was back at like, $15 to $20, then just went right up to 100. You could tell institutions were bidding that asset the entire way up. So I can't guarantee, like no one can guarantee that these assets are necessarily safer, but the so-called smart money or, multi-million dollar, potentially even billion-dollar funds are betting on these assets. The reason why they're betting on Polkadot, I think, is one of like the most misunderstood ecosystems in crypto, and they have had the largest surge in developers. If you look at Electric Capital's developer growth report that they released about 2 to 3 weeks ago, you'll see that during the last 6 months, the ecosystem to gain the most developers out of anyone was Polkadot, followed closely by Near, Terra, and some of the other usual suspects. But you always have to dig deeper. I think that's just a nice list to like begin with, because each one does have a very interesting narrative that could play out and may be worth betting on.
Right. And you can more or less assume that these hedge funds are doing that research for you. That's kind of the whole point of this list, is that the hedge funds do the legwork and then you kind of just follow their trades. But I agree. Like I think that the understanding the narratives, understanding why the hedge funds like Polkadot, why they like Near, will really help you as an investor and a trader in terms of like identifying other opportunities down the road. So, understand why they like Polkadot, why they like Near. That'll definitely help you a lot. So, yeah, really, really positive price action. Excited about today. No problem getting to your question, Daniel. Hope that cleared it up. But yeah, I think that's all we got. Any parting words, CJ, before we wrap up today's episode?
I was just going to bring up that chart of Polkadot's developer growth, but yeah, I can't get it to it at the moment. If you just check out, I think, if you guys are really interested in diving deeper, I would just go check out the report on Electric Capital's website of the developer growth that they put together. It's pretty interesting. It's a good one. I also like the one by Pantera Capital and Dan Moorhead of like the next big mega trend. I think both of those reports are definitely worth reading. But yep, that's it. Thank you guys for watching. If you'd like to learn more about our trade insights and what we do with the community on a daily basis, you can check out the link in the description below at marketrebellion.com/trycrypto. And if you like what you watched today, please hit the like and subscribe button. We really appreciate that. Helps the channel quite a bit. But thank you guys. Hope you have a wonderful day, and we'll see you tomorrow.